So a little bit of the news, the things that I've been seeing going on. The first ETF, electronic traded fund based on Bitcoin, got approved in Canada. That was about a week ago, actually. And it already has $195 million invested in Bitcoin as a cryptocurrency. But you can trade it on the Toronto Stock Exchange. So Bitcoin has made it to the stock exchanges. So there's a similar ETF in the United States that's like in final stages of approval, and hopefully it will also get approved here in a few days. Last I checked, Bitcoin had passed $57,000 a coin, making the person that bought a pizza with 16 Bitcoins the person that spent the most on a pizza ever. You can multiply those numbers together and go, wow. There is always these articles, and there's one of them in the notes. I couldn't find the one I was looking at earlier today, but there's another one in here from a while back, where it talks about how, here is uncrackable blockchain, and here's an example of it being cracked. And when you read down through the details, you find out that what the article is really about is somebody that made a mistake in a smart contract, and consequently they loused up their smart contract, and it has nothing to do with the security of blockchain. We're going to be looking at in detail how you implement this signature process and these security things in assignment 4. We're going to build it into a client server, and we're going to do signatures and verify the signatures for doing transactions. So we're going to take a close look at that in an assignment. But you get these articles where, they really don't know what they're talking about. And we now have MasterCard backed by a variety of cryptocurrencies where you can actually use your MasterCard in a store and go spend crypto instead of spending dollars. So as soon as you spend something, they transfer it. They allow you to transfer crypto to pay off the card. So this tells me basically that, cryptocurrencies have reached the mainstream. I also see that blockchain or Bitcoin in total value of all the coins, not all the coins are out there. Lots of people have lost coins. But if you added up all the coins and multiplied by the 57,000, it's worth over $1 trillion. So that's kind of the stuff that I see going on in the news right now. But, this is all the current stuff, and today we're going to start out with, about in the year 720. Okay. I just don't think you get too many computer science classes that start out in the year 720. But we're going to come back to 720 in a second. The real stuff that I'm talking about happened in the 1400s in Venice. And it has a history that goes back before Venice, and it's a history that's relevant to today. But in the 1300s, 1400s in Venice, there was basically 2 inventions that made a huge difference to Venice. And the first one of those is clear glass. They figured out how to blow glass that was, for all practical purposes, perfectly clear. And consequently, they had a technology that no one else had. And certainly, some people use this ability to do clear glass to, for instance, make a list of things that they were going to go out and buy that day that included a loaf of bread and 2 pieces of glass that they were going to turn into a telescope. And they looked up and found the moons of Jupiter with this telescope. So, clear glass was an important thing. The second one was double entry accounting. But they didn't start with this. To understand where double entry accounting came from, you're going to have to, we'll get back to the 1400s in Venice, but you're going to have to go back to the year about 720. There was a gentleman, Al-Khwarizmi, who in 720 published a book, and in that book he had the process called restoration. Now, he didn't just invent this one thing. This guy, he was a genius, okay? He lived along the Silk Road, okay? He developed some things in mathematics, that changed the world. The first one of those is 0. I wouldn't say that was the first, but that's an important one. Not having zero in your number system as a count of nothing makes a lot of stuff really hard. And, in 1400 in Venice, they were still struggling with the concept of zero, let alone negative numbers. They didn't have negative numbers, and negative numbers are going to play into this. But this particular guy, he wrote this book in 720, and it's called Al-Jabar, meaning restoration, and he basically applied these principles to how to manage finances. And this is kind of the underpinning of these things. I suspect you've probably heard of his basic 3 tenets. The first one is that debits equal credits. Now, for you, those of you who haven't been exposed to much accounting in life, the first thing I'm going to tell you about debits and credits is just forget whatever definition you think you know about what a debit and a credit is. Your life will be simpler. This is an accounting definition of a debit and credit. And we're going to walk through an example eventually here of this. But, it's the D word and the C word. But the D word has to equal the C word when you get done with the calculation. So that's kind of important. And he put together this process, that we have translated from algebra, which is ALJABR, to, you've probably heard of this, algebra. I suspect most of you have had a class in his basic principles there. In any case, this process allowed you to do calculations that put some security on your accounting processes, and if you made the C column match up with the D column when you got done, or if you calculated them out and they both came to zero, remember one of his other inventions there, the net result of that was you could be pretty certain that you had gotten things in balance between the two sides and your calculations were correct. So it was a self-checking system. And being along the Silk Road, this book eventually led him to a substantial amount of fame in the Middle East and a lot of work on writing these things. He wrote other books about, the location of 2,400 cities around the world, for example, and other things like that are really quite amazing. And he's also partially credited with invention of the world's first accurate sundial. So, this guy had a interesting history. Now, when you use a bunch of this algebra in a successive process, that's what we call today an algorithm. You'll notice the al in there. That should give you a clue where these things come from. But yes, he invented algorithms, algebra. Yes, we use these things today in some fields. And, these were in use by different kinds of accountants. Now, his 3 principles of accounting is that debits equal credits. If you can't make them add up then to the same thing, then you've got something out of balance. That you have real accounts. These are cute things for tracking wealth. And you weigh your real accounts against your liabilities to determine whether or not you have actually made any money. And this is his basic accounting principle. And he had these nominal accounts, and these are activities that affect your wealth that you have to add into this. And we're going to look at some examples of nominal accounts and how we add that into the value of things today. Now, by the 1400s, 1500s, actually I think the person that is credited with the actually writing down double entry accounting is a Franciscan friar, Lucy Pacoloni. I'm probably mispronouncing his name just like I'm mispronouncing other names. But in medieval Venice, he wrote this book, Summa de Arithmetica Geometra Proportional Proportionality, in 1494. And his detailed system took what a number of merchants in Venice were already doing, and it wrote it down clearly as to how you were to do this. And it's our first clear specification in writing of how you do double entry accounting. Now, between clear glass and double entry accounting, this made Venice into a world power. It created wealth. And this is not the only time in history we've seen, great amounts of wealth accumulated because they did their books and their work and how they were counting stuff more accurately. But I promised you that we'd do the C column and the D column. And you might have credits and debits. If you think about your English common usage of a credit and a debit, you're going to confuse yourself. I have seen people do this regularly where they say credits and debits and then they start using the English definition. This is kind of like, the difference between I have a theory about how the world works and a theory in the context of science. For instance, there is a theory of gravity, and if you don't believe theories, go drop a hammer on your toe, and you'll find out how well that theory works. So credits and debits, in the context of accounting, it means something. And you see these T diagrams where you'll have, 5,000 on one side over here, you'll have 2,000 over here, and you have 3,000 over here. And when you add these up, you end up with 2,000 and 2,000 at the end, and the values add up to balance. And you know that when you get the balance, that since you got the same values on both sides of this equation, that you've probably gotten it right. Okay? Now, there is a set of things that we account for in accounting. Okay? And accounting is useful, boring, but required. Okay? There's a set of things that we deal with in accounting, and whether or not something is a credit or a debit, which side it goes on. But the basic principles of this in the United States, at least, have been applied into a set of principles called GAAP. There is an international standard for accounting as well, but in the 40s, this came into being. And some people credit GAAP, this generally applied accounting principles, with a lot of the reason why the United States economy grew better than anyone else's. And, the basic principle of a lot of what we're doing in blockchain is that if you have a standard by which you can account for things accurately without making mistakes, then you make your capital markets more efficient because there's accuracy. And when people invest, when they look at businesses, when they evaluate what they're doing, you get better results because the business isn't lying, it's telling the truth about what its accounting state is, about whether it's making money or not, about whether or not it's of value and whether you should invest in the business. And that makes for efficient capital markets. So the invention of GAAP, or the requirements for doing these generally applied accounting principles, they have made a dramatic difference in the efficiency of our capital markets in the United States. That efficiency means that our businesses do better. And over years, this principle of GAAP and doing this has made great amounts of wealth for us, just like it made wealth over here when they started using double entry accounting. That they could have a more efficient capital market, investment was done better, you get better results at the end. Now, I mentioned that there are things that you account for in strange ways. The valuation of some things is really quite strange. For instance, you might think that the evaluation of some things is Mickey Mouse. Actually, Mickey Mouse is a good example of a very non-Mickey Mouse evaluation of value. Mickey Mouse is a trademark of Disney Corporation that they value at several $billion. And consequently, they put it in as an asset on one side of their accounting. That Mickey Mouse is valuable and we have this asset. And consequently, it adds to the value of the company. Now, you say, how can you value something like that? Well, that's kind of a difficult thing to do. And I'll also point out to you that where these values occur in the world turns out to be really important. Because Mickey Mouse is a trademark, it's an asset, But it isn't necessarily an asset that has to stay in the United States. I mean, you could take Mickey Mouse and transfer it from the United States to, say, the Bahamas. And it would still be an asset for the company, but it wouldn't be taxed the same because it's no longer in the United States. So you have these kind of assets that you can say, this is an asset worth X because I sell this many Mickey Mouse t-shirts. I have this many movies. I have this many TV shows. Here's the revenue. Here's the goodwill that this asset produces. And when you start valuing something like that at $4 or $5 billion, there's not very much that's Mickey Mouse about Mickey Mouse at that kind of a value. That is a pretty big asset. Now, you get to count for that in your books. You also get to account for things in your books that seem quite odd sometimes. And this accounting determines what you pay for capital. The results that you're getting from your business. That determines how much you can borrow, how much you pay for what you borrow. Is your business making money or not? Okay, that's why generally applied accounting principles in these things are really important because they provide a standard that gives transparency to an awful lot of financial transactions. And that makes a lot of wealth, that transparency. Now, here's another example of something that is quite odd. You know, if I go out and run a ranch and I run 200 cows, I do a cow-calf operation, and I go to the bank each year to borrow money against the value of my cows in the future, basically to get the mothers pregnant, have them have calves, raise the calves, and at the end of this, these calves are going to go on to a backgrounder. Now, across the entire system of the cows, what is the chance that a cow doesn't get eaten? Well, it could die. It could get sick and die. And that's 1 or 2%. Depends on the year, the ranch. But most of the time, most of them, you know, they're going to end up in a restaurant. They're going to end up in a grocery store. And they've got a pretty defined value. We like to eat them. So the total risk across the system is, what is the risk of the cow not getting eaten? But the risk that the rancher pays is based on the risk of being a rancher, not the risk of the product. And you see this in all sorts of different kinds of things. Now, the risk of the rancher is way higher. They might pay, you know, something like 8%. They might pay 10% interest for a loan to run their business. And because these rates are so high, we actually have federal subsidy programs that might drop this to 5%. So the government subsidizes the rancher because the risk is so high of ranching. But wait a minute, these cows, what's the chance of them not being eaten? So if instead of having, you know, business 1, business 2, business 3, and it's going from these things to the next one, to the next one, to the next one, if you said, what's the risk of this product instead of the business, and you ask that question, you get a completely different risk model. Now, notice that the value of GAAP is in valuing the risk of loans. It's in valuing the value of investments. So if you could build a model where you say, yes, I'm going to blockchain track the cows, and we are going to provide the money to the rancher up front for the eventual end result of the ranching, and we can evaluate the risk all the way through the supply chain instead of the risk of all these 14 different pieces that it normally goes through, and say, what is the risk in the supply chain for this product? We will either value it and lend against it, or we'll value it and pre-sell it. That's a future on the value of the cow. But one way or another, suddenly, you know, instead of paying these kind of interest rates, you're looking at maybe 2 to 3%. And the difference between those is huge, because not only does the rancher pay this, but the trucker pays pieces when they ship the cows, the backgrounder pays pieces, the next trucker pays shipping, then the sale barn pays interest. The sale barn has shipping after that, they pay interest. And successively, each one of these people is paying these numbers in interest for all the pieces, and those higher interest rates add up. So one of those things that you might think about in terms of blockchain is the fact that we can change the nature of accounting itself. And this isn't my only example of changing the nature of accounting. One of those things that turns out to be really important is, remember, the value of GAAP and this double entry accounting, both of those were to make more accurate accounting so that you got better numbers. Now, I don't know how many of you will remember, Donald Trump had a campaign manager by the name of Paul Manafort. Paul Manafort got indicted, and he got convicted of 7 counts. 5 counts of that were for accounting fraud, and he went to prison for a while before Trump commuted his sentence. But he got 7 years basically for accounting fraud. And the particular kind of accounting fraud that he did is the most common kind of accounting fraud. He went back into his books and he changed values in the past. He tweaked the books. He lied. And that's a crime when you're cheating people because you're not applying generally applying GAAP principles. That is a crime. That is a felony. And it's really hard to get out of in court this felony because guess what? You can show the way the books were, the way the books are, but it takes a lot of investigation to figure out what did the person change. Okay? Now, if you could make a system where they can't go into the past and change the past, now that would be a fundamental change to accounting. In fact, in blockchain, that's exactly what we have. We have a system where you can't go back in the past and lie about the value of accounts. Or it is, for all practical purposes, impossible. I mean, yeah, we could go in the past and we could change something in Bitcoin, but there's $15 million an hour in electricity being spent to put the seals on those things to say, yes, it's true. And if you change the past, you would have to go back and redo all those calculations. So, at several $100 million a day cost, plus billions of dollars of hardware, nobody can do it. Or it isn't worth doing. So, blockchain turns out to be the first technological innovation in accounting, and basically since the 1400s and the invention of double entry accounting. So, this new capability in accounting means that lots of cases of fraud couldn't be done. Now, I've actually had a controller come in, a financial controller for a business, and I won't say which one, but they came in one evening when I was working late, and they asked me to go into Oracle Financials and plug in $5 million for the value of inventory at this particular place. And I told them no. Because what the person is asking me to do is commit financial fraud. There is no way that you have exactly $5 million in inventory. That's just screaming, this is a fake number. And I don't know if they did it themselves or not. If they did, they committed fraud, but I didn't help them do it. Okay? So these things are real and they happen. Now, if you put your accounting system onto a blockchain, then suddenly, this accounting system can't cheat. I have another example of cheating. Okay? And this one is a little bit different than Manafort going to prison for financial fraud. There are some individuals that we'd like to not be able to spend their money in the world. And Oleg Deripaska is one of those. Oleg Deripaska made his billions by basically being a gangster and taking over Russian aluminum manufacturing by a lot of nefarious things. And at one point he was living inside one of his aluminum foundries with guns and a military contingent of his own so that he could protect his facility from other people. That should give you some kind of clue. In any case, he goes out and he wants to spend some of this money. But, we have sanctions against him spending this money because, he has done all sorts of nefarious things around the world. So, you'd like to find out if he takes the money and he does something where he can take his dirty money that he has lots of and turn it into clean money and spend it. So, you look at how he buys Bitcoin. And you say the Bitcoin went in over here, Okay? It came out over here for the purchase of stock in this little company. Okay? In a place that doesn't care whether or not you do this. And the price of the stock went up because the demand went up. He bought a lot of it. And consequently you go, oh, that's weird. The price went up and he didn't do anything. And then the price went down and he sold it, so he lost money. And you go, oh, and he did it again. And he did it again. And the reason we can track this is because we can see where in the blockchain world the money came out of the blockchain and it went into this stock. And you go, that is really weird. Okay? I mean, why does he keep doing this? And then you ask the corresponding other question. You say, who made money on this? I mean, he's losing money consistently on this. He's either an idiot or, okay. And we don't think he's an idiot, okay. We don't like him as a person, but we don't think he's an idiot, okay. And so you start looking at these other accounts that suddenly are buying it at the low point and consistently selling it at the high point. And you say, oh, who owns those other accounts? And you start doing some research and you go, oh, he owns the other accounts too. Okay? And he's trying to hide that fact because when he gets it sold out of the stock, he's laundered the money through this company and he's turned his dirty money into clean money. So there are plenty of examples of this sort of stuff. You see a lot more money laundering in real estate than anything else. But these kind of things are very real, and this is where you want accounting principles to be accurate, that you can't inflate the value of property when you borrow against it, and deflate the value of the property when you get insurance against it so that you don't have to pay as much insurance, and deflate the value of property when you turn around and pay your taxes, so you pay less taxes. That kind of stuff. Suddenly, if you're using a consistent set of books where you can't go in and tweak values arbitrarily and change things in the past, becomes very, very difficult. So this is kind of the picture of accounting. I have no clue how or if we are going to ask any questions over these kind of pictures, but I wanted to spend more time looking at this kind of stuff in the application realm of blockchain and why blockchain is so important. We're going to talk about using a blockchain to track stocks and values of currencies here too. So with that, let me erase this and we will move on to other kinds of finances and how they interact with blockchain.